Thank you. Thanks again for the invite. Appreciate it. Welcome, everybody. Great to be with you. Hey, Michael, it's been a while. Uh, glad to glad to see you again. That's great. Please, everybody, by all means, type in your symbols. Let's make this as interactive as possible. I thought I'd just start with a quick review of the equity indices here: the Dow, the S&P, the Nasdaq, and the Russell, and then maybe break down the different sector ETFs, and then open it up to all your symbols and questions. So right now, I mean, the market saying that it's been volatile is an understatement, obviously. We've had a great pullback off those lows, right back to the 20 MA here, which is sloping lower. And looks like we've kind of stalled. Today has been fairly quiet. The lowest range day, if you look at today's candle on the Dow here from high to low, the lowest range we've had in a while. So it's been fairly quiet. I've been waiting to see if we could close back above that 20, maybe take out a prior high. That would convince me a little more that maybe the bottom is in, but it certainly does not feel that way. And if we get a short setup here, that would look actually pretty good for a move back to these lows and most likely lower from there. So when I look at a stock, I like to look at three different time frames. Normally, I trade on the daily time frame, but even at times when I drop it down and take a day trade, say on a 5 minute, I will look at two higher time frames for confirmation. So when we look at the Dow here, we are below the 20, which is one of the main things that I look at. I will only go long if it is above the 20 MA and only go short if it's below the 20. Now, that isn't the only thing I look at. There are a few other things that I want to have in line with that. But as you can see down here, these two ribbons are for the higher time frame. So the top ribbon is the weekly time frame, and that is currently red. And the bottom one is monthly, which is currently green. So right now we have the daily and the weekly below the 20, but the monthly time frame, we're sitting just above it here. So, it wouldn't be overly surprising if we bounce off this 20 here and make a run for new highs again. Although the main issue that has caused this drawdown, which is the fear and concern around all the unknowns with the tariffs, that is still ongoing. So at this point, I'm still in the camp that we should see lower prices for now until this is resolved. If we look at the S&P 500, very similar look to the Dow, almost identical. And again, if we set up short here, we're likely to at least retest these recent lows, which are a good distance away. I mean, we're at 54.32 right now. The lows here come in near 48.30. So that would be quite the move. The Nasdaq, similar, down just 3 points. So today's action has been very, very flat, very quiet, uncommon recently. We're into earnings season as well, and so in the days and weeks ahead, we'll get some announcements that will move this market. We're waiting for some of the bigger names, the Apple, Amazons of the world. The Russell completely flat here as well. And then if we look at crude oil, it is down again today, although the last few sessions have been more or less sideways. But big drawdown if you go back and look at where we were for the last couple of years, all within this range, this highlighted range, and then we broke out of the lows and made a run down to 55 here before bouncing, and currently are sitting at 61. But again, if you look at here, there's certainly more room for this to drop. There'll be a lot more support down in the 30 area, but boy, if we get down there, I think things will look much different for many stocks and the economy as a whole. So Not, the thought of seeing oil go from 60 to 30 is pretty scary right now. Gold, as Dave Landry was saying, is the one area that looks really, really good right now. We're sitting near all-time highs, and you can pull up just about any gold name right now, and it'll look pretty good. So this one has held on very nicely and still looks like there's room to go. I mean, whenever you're at all-time highs, there's no resistance overhead, excuse me, and allows uh, you know, for plenty of room for more upside. Silver, lagging gold. Silver, the level I was keeping an eye on was up here, just above 35, that where this orange line is. And we got there a couple times, and then we had that massive sell-off in 3 days. It went from 35 down to 27 or so. And now it's come back quite a bit. We're back above 32, but we've got more work to do to get back above there. The reason why I really like the 35 level, and I would encourage everyone to set an alert there, is if we look at the monthly chart here, if we were to crack 35, get above 35, and by get above it, I mean close there, and then follow through on the high of the bar that closes there, then we have a clear path, absolutely no resistance up to the all-time high here near 50, and likely we'd go higher. So, we've seen a lengthy consolidation back here, bit of a bump, a lengthy consolidation here, and now we got back, tested that level twice, have pulled back. The third time may be a charm here. We break and we start moving to new highs. Bond yields have been lower today, although everyone is keeping an eye on the 10-year for the 4.5 level, the 30-year for the 5% level. We've backed off a little, so a bit of fear has come out of this market right now. And again, everyone's waiting for more news on these potential tariff discussions and deals coming up. Let me quickly run through the main sector ETFs that I look at, and then we'll start taking some of your questions. XLE, which is the energy ETF. This one had been consolidating for quite some time. By the way, all these markings that you see on the chart, the reason why they're there and the reason why I didn't clean them up before the presentation is we have a membership group at Trading Winds, and we meet 3 times a week live on Zoom for a minimum of an hour each time. And we mark up our charts, and we're always looking for trade ideas and different patterns and so on. And when I mark them up, I leave them there so that whether it's a few days, a few weeks, or a few months later, we come back to that chart and we have a look at how everything played out. So we had been looking at this consolidation here, where we're keeping an eye on the series of highs up here near 94. We were also looking at these lows that we connected here. And once we broke below that, obviously we started to really accelerate lower. And now we're actually keeping an eye on the low from here, from June of 2023, going back a couple of years. So, for a couple of years, oil really did nothing. And now we had that breakdown. If we close below that low from June of 2023, which was 76.25, we're not that far off, right? We're at 79 here, about 3 points lower. If we close there and follow through, then we are likely to see another push to the downside. If we look at XLF, now these are the monthly charts, okay? Looking at the longer term picture here, we've had a nice bounce off that 20. In fact, we came right back down to this prior high and bounce. That's great structure when you're looking at a chart. Holding support like that and bouncing is bullish. Now, can we push back into all-time highs? We may. Right now, most of the banks that released earnings this week, said that, a lot of their the bump in earnings came from their trading activity, et cetera, which was great. But the picture looking forward for 2025, the rest of 2025 is uncertain due to the tariffs. So again, there's a lot up in the air here. If we go down to the daily time frame, most of the financials look very similar to the S&P, the Dow, the Nasdaq, et cetera, where we've managed to rally back to that downsloping 20, and now we see if we can either overcome it or if we're going to set up short again. XLK, there it is, the technology sector. So this includes, Apple, Amazon, Meta, Alphabet, etc., Tesla, and we saw a big push lower. First of all, that sector led the rally for many, many years to the upside. It was the leader. Now it broke down here and was leading the way lower. But again, big test coming up likely this week here with the 20. Hopefully by the end of this week, we'll know which way this is going to go. There are two sectors that have been acting a little better than the others. And that is consumer staples, XLP here, which is actually above the 20, and utilities, which is barely above the 20. Now, before this drawdown started, we were close to clearing a level on the highs where we should have started making a nice move higher. But when panic sets in, everything gets sold. And we're not even at the point yet where we've really seen a lot of margin calls kick in and that sort of thing. When you see real panic and people start getting margin calls and so on, it doesn't matter how strong the case is, whether it's from a fundamental analysis basis or technical. Everything gets sold off. If you're getting a margin call, even the good things that you have in your account are going to be sold to cover the deficit, right? So, some of those gold names that look great right now, if we were to push lower again on the S&P, the Dow, the Nasdaq, and especially take out the recent lows, I think you'd also see gold pull back for that reason. But hopefully we don't see it. But again, we'll have to wait for confirmation. XLV, the healthcare sector, well under the 20 here. Again, making a rally here, a push, but not all that strong, right? So looks a little weaker here as well. Consumer discretionaries also failing to get back above the 20 so far. Real estate, giving it a try here, but still under the 20. Industrials below, materials, communications, retail, all of them. So for the most part, we are sitting below the 20 in bearish territory on the near-term charts. The weeklies also, the majority of them are below the 20. The monthlies, there's a few stocks that still look pretty good. Now, Walmart being one of them. If we look at the daily chart, yeah, we're back above the 20. Same here on the weekly. And here it is on the monthly. We've had a real nice bounce. This is the all-time high. There's really no overhead resistance. So again, if panic sets in again, we roll back over on the main index charts, I would expect Walmart to come back with it. But if not, if the bottom is in, we should expect Walmart to lead here. We should know fairly soon. Let's see if there's any symbols that anyone is looking for. Michael says, SPY hit top of trading range and higher probability of reversion to the mean. Yep. I mean, that's the thing. Whenever you pull away from a moving average like this, from like the 20 here, you're going to snap back to it. But the snapback does not mean that there's a change in direction, right? For a change in direction, what you really ultimately want to see is not only a cross to the other side of that moving average, but a move above a prior pivot high in this case. Or, if you're if you're looking at the opposite direction, a move below a prior low. And also, ideally, what you want is higher highs and higher lows, and a 20 that is sloping higher, not sloping lower. A lot of times when you see a push like this and you see a nice bounce, a nice rally, it fails. We crossed, but we couldn't hold it. We turned around, and when we came back to retest the 20, we broke back below again. We didn't hold it, right? So that's the difference. So if you look in this little area in here, we broke below, we rallied, we failed here. We couldn't get back above it and take out a prior high. We failed, right? Now we didn't take out that low, so at this point you knew you were in a bit of a channel, and then you take out that low like we did here. More often than not, that's what triggers that next leg. In this case, it didn't. It rallied. We came above here, and then on the retest we held. Okay, and so for the next little while we were going higher. That's what you're looking for. So it's usually not the initial cross that that tells you that, or that confirms that complete change in direction. That's why we're looking for either a move below a prior low, like we had here, right? Or a retest, a move back to the 20 that then acts as support, just like it did here. Came here, 20 acted as support or resistance in this case, and we pushed lower again. It attempted to get above again and failed again. So here now, we're looking for the same thing. Can it get above? If it fails, we're likely to come all the way back down here. If not, lower. All right. Let's see. Rolf says, Simons, nice to hear your thoughts. Thank you. The deep recession will soon begin. If so, where do you see the decline in SPY Qs going in 6 months? Do you still use the Ichimoku clouds in your graphs? Great question. So the Ichimoku cloud, no, I don't use that simply because the new victory system that we have here, that you're seeing here, these buy and sell signals, it kind of incorporates the same the same things that the Ichimoku cloud was doing for us. So when I overlap the cloud, the trades I'm taking on here would be similar, you know, would qualify whether I had that cloud or not on there. So it's just a duplication, and to clean up the chart, I kept it off. But the algorithm behind the scenes confirms the trend in a way that usually it falls in line with the Ichimoku cloud anyway. Now, to your other question about where we would be in 6 months, I mean, listen, if you're going to look 6 months down the road, you want at a minimum to look at a weekly chart, if not a monthly chart. And one of the best things to look at when you're looking further down the road are areas of support and resistance. So in other words, if we continue to break down, where would we find some potential support for this market, an area where we might hold and bounce? So where you see a lot of activity, a grouping of candles or bars, usually there's volume in there. Now, one indicator that you can use is the volume profile indicator, which shows us where the bulk of the volume was for each price level. So if you look at these 4 bars in here, there's a little more volume in here than there was up in here, right? In other words, when you're pushing higher that quickly and that strongly, there's very little volume that's transacted at each price level, right? Because the offers are being taken out one after the other very, very quickly. When you kind of consolidate, then you get a lot more volume within the same price level. If you go back down here, when the market kind of went in a range for several years, you got a lot of volume here. So in my mind, we'd be looking for an area that would potentially hold. Now, If we come back and take out these lows here, I don't think this area will hold. If panic sets in here near 475 on the SPY, I think we clear 400. Again, a lot of it depends on what happens with the tariffs. The risk in this environment is that things can change very, very quickly, right? If Trump were to come out and just say, "Hey, I'm pulling back all the tariffs," I think we'd get a massive rally, right? What are the chances of that happening? I don't think there's a very high chance of that happening. But again, I have no idea what he's thinking and what he's planning to do. So I look at it from a standpoint of support and resistance. The worst case scenario that I see, which may seem unrealistic at this point, but if everything comes together as the perfect storm, meaning these tariffs stay in for a while, and what most people are predicting actually comes true, which is a spike in unemployment, a severe spike in unemployment. You know, you get that period where you get higher inflation with lower growth. Um, I, we may come back to this level here, the 160 area on the spies. Now, yes, that's very, very dramatic right now, it seems, right? Going from 537 where we are to 158, 160 here. I mean, we're talking about a massive crash. But when you look at this chart and you look at where there might be support, there just isn't a lot. So if things start to snowball, it won't be that difficult to get down here. Um, I hope we don't see it, but considering that, in my opinion, since 2008, since the financial crisis then, where those bailouts happened, quantitative easing came in and all that stuff with the Fed, and then through the COVID pandemic and so on, you know, all the money that's been pumped into the system to keep things going, we've been kicking this problem down the road for a while. At some point, we have to face reality and let things sort of fall apart to come back down to reality and really adjust the system completely. That the amount of debt we have is insane, and I don't know how we get ourselves out of this without a massive crash. So the Fed can come in, save the day again, kick the can down the road some more. But if they just let things play out as is, 160 is not unrealistic in my opinion. For Tesla, someone was looking for Tesla. Tesla is interesting. Right now, it is in a critical spot. If you look at these lines that we had drawn, these were the areas where we found significant support or resistance. With our group, the last short we had was right here, this dot right here. Once we pushed below this key level, we came back to retest it, and we had this down bar here on Feb 21st. This is when it confirmed to us that it failed to get back above. Look at that down sloping 20, and that we were going to continue going lower. And the next level of support was this red line down here near 270. So we actually shorted this here on Feb 21st and covered when we hit that line. Now, we broke through, it pushed back up. We were looking for the exact same thing. Is it going to bump into this wall of resistance and fall back lower? It pulled back, it's held these lows. So what I'm looking for Tesla is either a move above these highs or a move below these lows here. Those are the two levels that I have set alerts at, right? 290. I put it at 290. This is more like 292 and 215 to the low side. If we get below 215, I think this is going to continue. If we get back above 290, we could rally here. So those are the key levels I'm looking at for Tesla here. And you know, there are a few key names here, like Apple. Again, this was a pretty ugly bar yesterday for Apple. Failed to remain above the 20, closed near the lows. Today, very, very small range bar. Today, you'd be better off going golfing than watching this market today. But we're waiting for the next piece of news to drop, whether it's some economic data point or a comment from Trump, something to give us a bit more ammunition to trade off here. But I think that the longer these tariffs stay in place, the higher the likelihood we continue to go lower. And earnings now, we heard of the banks, right, which had great earnings due to their trading profits from uh, the last few months. But I'm interested to see earnings from the likes of Apple, Amazon, um, Tesla, and so on. Those numbers may not be as good, and that could be another reason for a big sell off. Have a look at Amazon today. This dot tells us it's a good day to get short here right now on Amazon. So, this is one of the first that we've actually received here by this downsloping 20. So, based on this, if we break today's low, wherever that may be, there's still a couple more hours to go in the trading day. But if we break that low, we are likely to head down to the low from April 7th, which was 161. We're at 178. And then from there, we ask ourselves, is there support there? Right? Or can we pull back even lower? There's support down to about 150. Below 150, from 150 to 100, there is nothing. That right there is a great opportunity that I would I would hope everyone is setting alerts at. If you see Amazon below 150, the likelihood it goes to 100 is pretty good. So there's going to be many opportunities in both directions, but right now, what we need to wait for is confirmation from the Dow, the S&P, the Nasdaq, the Russell, as to what is the next near-term move. Are we going to set up short, or are we going to make a run back above the 20? That's what I'm watching. I'm out of time here. I'm going to hand it back to David. If any of you have any interest in what we do here at Trading Wins, just go to TradingWins.com. Okay, that's trading wins.com, and that's me here. It'll give you a bit of information about what we do. You can also email us at info@tradingwins.com. But David, I'm going to pass it back to you. Thank you again